Thank you very much. And I feel really humbled, and I'm really glad that I had an opportunity to speak after Philip and Peter, because they have provided such a fantastic overview of this space from many points of view, really. And I hope I will not spoil the mood with the regulatory talk, because unfortunately, news that I'm bringing is perhaps not as enthusiastic as the presentation from Philip and Peter. But what I wanted to do first is to refer to what Peter was saying, and he was mentioning an expression saying that software is eating the world. And I would perhaps expand on that and say that software is actually shaping the world. And we can see how the software is shaping the world by observing the state of the current internet, Web 2.0, and how the internet is really shaping pretty much everything around us, including some of the most important decisions and some of the most important occurrences in our life and in the life globally. So we know what happened with the election in the US and potential manipulation of data and leaks of data and so on and so forth. So what we have an opportunity now to do, and that's a unique opportunity really for the community, is to redefine how internet is being built, redefine those foundations to shape our world perhaps in a slightly better way than it's been done until now. So I will share my screen and please let me know if you can see my presentation in just a second.
Not yet.
Not yet. Okay. Just a second. I'll try it again. I'll try again. Can you see it now?
Yes, now it's working.
Okay. So my name is Agata Ferreira. I am a Chief Legal Officer for Status.im, but I am also an academic and an expert at the EU Blockchain Observatory and Forum, and involved in a number of other initiatives, including, as has been mentioned before, I'm an advisor to Blockchain Founders Group. So I, as I said, I'm a Chief Legal Officer for Status.im, which is provider of messaging app, crypto wallet, and Web 3.0 browser in one super app. And also more than that, it's a company that is involved in a lot of development in Web 3.0 space. And all these developments are driven by our principles, which we try to adhere to and we stay true to, which is more or less the original principles of blockchain as it's been created in its origin, like censorship resistance, security, privacy, transparency, openness, and decentralization. So we are involved in a number of infrastructure projects really to contribute our efforts to building Web 3.0 space. And as you can see, we are the fourth biggest projects in terms of developer activity, just to show you how much development is taking place behind the scenes, so to speak, although all our development is open source and free for anyone interested to inspect and look into. So going to talking about regulation. And a little bit has already been said about what is DeFi and how it should be looked at and defined and so on. But there is a lot of challenges really, and regulators are now actively looking at how to regulate DeFi space. Up until recently, DeFi was free to be developed without much of regulatory scrutiny, without much of concern or consideration being given to regulations and laws. And I believe that time is over now. This is no longer possible to get into that space as a developer, as an operator, as someone interested in building applications without having some kind of considerations for laws and regulations that may affect that space. A couple of weeks ago, for example, Executive Director of BaFin, Brigitte Rodolph, has appealed for comprehensive regulation of DeFi across the EU. And she made the point in an article on BaFin website, emphasizing risks to consumers, stating that DeFi protocols cannot function outside of rules just because they employ new technologies, and claim to be outside of reach of law and governance regulations. So this all came in the wake of recent crypto crash, leaving many people affected, both DeFi customers or users, but also the whole DeFi ecosystem. Now, I personally don't believe we can address DeFi phenomenon with a simple question how to regulate it. It's a very one-dimensional way of looking at it. So let's quickly recap what DeFi is. And DeFi really is a very nascent phenomenon. 2 years ago, hardly anyone had heard of DeFi. There is still no agreed definition or clearly defined terminology, and it has been described as anything from a protocol stack to loosely defined collection of ideas to movement or to even economic paradigm shift. So DeFi does not refer to any one specific single thing, or feature or project, but it's an idea of an alternative new financial system that is being built on the premise of decentralization and disintermediation, which is all enabled through blockchain. So what DeFi signifies is entire emerging ecosystem of composable building blocks of DeFi financial primitives, so to speak, and of underlying blockchain networks, all the crypto assets in the DeFi space, and the whole community of developers, operators, and participants. So from these new fundamentals, Web 3.0 fundamentals, what emerges is the entire traditional financial products, services. So you can hear about lending, borrowing, insurance, derivatives, and so on. So these are the terms very familiar to all of us. But what is significant about this space is not the products and the services that are being offered, but the fact that they are built and delivered through entirely new financial architecture, through entirely new principles and philosophy. So it's a multidimensional and dynamically evolving phenomenon. And the true DeFi disrupts not only the financial world, but also conceptual frames of regulation. So from basic normative principles to regulatory mechanisms and tools to the efficiency of regulatory efforts. So just imagine this. DeFi represents seamless, open, transparent, and permissionless transactional space. And in that space, practically an infinite variety of tokens that represent infinite variety of economic claims can be seamlessly traded in this universally recognized digital form of a token. And this in itself renders the current approach to regulation out of sync, and not only as a matter of degree, but as a matter of principle. So from legal and regulatory point of view, this is a profound disruption and it's a true paradigm shift. And DeFi is really testing regulators, authorities, lawmakers, and the whole legal community at large. It puts a legal community to a very tough test of their competency, but at the same time, it creates a unique opportunity to reassess our current state of affairs. And that opportunity is unfortunately not realized because regulators have a reactionary stance to this phenomenon. They play catch-up strategy, and that's not a very good approach. And as you can see, there are a few very fundamental challenges for DeFi and a regulatory approach to it. First of all, laws have been built for centralized systems, and they have been built for a long period of time through incremental development, lots of different debates and lots of different compromises. And this world that we are talking about here today is decentralized. So just these two things together is there is already incompatibility there. laws and regulations are also built for particular jurisdictions or for particular narrowly defined competency. So they are basically jurisdiction-based. Laws are defined neatly divided into jurisdictions. Now DeFi is cross-border. DeFi blurs all the boundaries, not only jurisdictional boundaries, but market boundaries and other kinds of divisions and boundaries in unprecedented way. So here you can see another incompatibility. There are also no regulatory precedents for how to regulate DeFi. This is a brand new phenomenon, brand new space. So we have nothing to lean back on in terms of precedents, how to regulate this space. On top of that, there is a huge knowledge and expertise gap, and that's as between regulators themselves, but also between lawyers and technological community. There's lots of these different streams kind of growing out of sync with each other. So technology is developing at the revolutionary speed. Laws are developing at incremental, slow speed. Each of these communities represent different level of understanding and different level of comprehension of this space. And what we are seeing is a very little often very little level of interest from the regulators and policymakers, although this is changing now, to actually understand the profoundness of this new phenomenon, to understand the issues deeply rather than look at it from a very superficial kind of approach as to how do we regulate it. And on top of that, DeFi is growing at such a speed that it's increasing in complexity quicker than any of us can actually catch up and comprehend. So you can see there is a lot of incompatibility, there is a lot of tension there, and there is a lot of competition of interests as well. So we have an established financial world, which in some regions like Europe is very powerful and it's been built over a period of time. And then you have this nascent new phenomenon growing at a revolutionary speed, escaping all kinds of checks and controls that are assigned to a traditional space. So a lot of tension there. It's a kind of a new world versus old world, a little bit of a tension and confrontation. Now, in terms of true regulatory development in EU, because that's the title of my presentation today, there are only two things to say really at the moment. First one is MiCA, which, if you're not familiar with it, is a regulatory proposal that is being discussed at the EU level to regulate the entire crypto space across the EU. So all crypto assets that are not currently governed by financial regulation. This regulatory proposal has been published by European Commission about 2 years ago. It will be in September, it will be 2 years ago. And when it was published 2 years ago, which was 2020, there was nothing in the original draft to talk about DeFi. The MiCA regulation was silent on DeFi. This is not the case anymore. Through this process of negotiation and lobbying on all kinds of, on all parts, we now probably will see reference to DeFi in MiCA. In my view, current drafts that are being circulated create a little bit of a confusion, because the idea is that DeFi is not going to be subject to regulation. However, DeFi is being emphasized. First of all, is being recognized. That's already a big step on part of a regulator, that the DeFi space is recognized is acknowledged, it's existing. And under the current proposals, there will be a lot of emphasis given on assessment on the DeFi space of the level of threat that DeFi presents to financial systems, to money laundering, terrorist financing, and other criminal activity. So bodies like EU Commission or ESMA will be obliged to report on the volume of transactions on DeFi protocols and decentralized exchanges, They will be obliged to analyze the risks posed by money laundering and for money laundering, terrorist financing, and other criminal activities that are posed potentially by DeFi space. MiCA regulation is also may also mention DAOs, so decentralized autonomous organizations, as an acknowledgement that some crypto assets might be actually issued by DAOs, and there might be an opportunity for them to be admitted to trading at the EU level, but this will be subject to checks and scrutiny, whether there is a compatibility with MiCA requirements, whether those assets do not pose risk to financial stability, market integrity, or investor protection. So on one hand, the EU regulator will admit and acknowledge DeFi space. MiCA is not yet an attempt to regulate that space, but it's an acknowledgement with the caution, and DeFi space will now be watched and scrutinized by the regulators as a matter of statutory legislative obligation on the part of some of the EU bodies. Another important development that is worth mentioning here, so MiCA is not yet in place. It's going to be at some point this year will probably be passed, but we don't know yet the exact timeline. And another discussed proposal at the EU level is TFR proposal. So this is a recent EU proposal on transfer of transfer of crypto assets, which will which will potentially compromise some of the privacy that blockchain space brings. Because for every crypto assets transfer involving an unhosted wallet, crypto asset service providers will have to collect personally identifiable information on both sender and the recipient in that transaction, verify the accuracy of collected information, and report such information to EU and national anti-money laundering authorities upon request, or automatically for all transactions over 1,000 euros. So what we are seeing here is an attempt to identify owners behind pseudo-anonymous wallets, and that is kind of the threat on privacy that myself and Philip have recently even published an article about, which I invite you to read on Medium. So this proposal will possibly register crypto history of the wallet owners and will create some kind of registry linking blockchain addresses to the owners and the counterparties. So, and in addition to that, and another kind of proposal in that TFR proposal is what amounts to, in fact, prohibition of transfers to and from non-compliant providers. And non-compliant provider will be basically decentralized, for example, decentralized exchange, and all kinds of providers that where you cannot identify the counterparty. So that may amount to ban on transacting with DeFi protocols, because all the providers of crypto assets that are not established and do not have an essential central contact point and substantive management presence in EU jurisdictions, or are unaffiliated with a regulated entity, will be considered non-compliant providers. Another set of regulatory kind of attempts that can affect DeFi space is basically AML and CFT considerations, that stands for anti-money laundering and counterterrorism financing. And currently the rules, the global rules, are mandated by Intergovernmental Organization and Global Watchdog Financial Action Task Force. This is not a democratically elected body, but it issues recommendations and guidance regarding anti-money laundering measures, and individual countries are encouraged to adopt those rules. Now, what we are seeing is some countries and regions go beyond those recommendations, and they implement very strict regimes for virtual asset service providers, or they are interpreting the existing rules very expansively. So the latest guidance, which was issued in October last year, expands this onto peer-to-peer payments and to some extent to DeFi. So the software in itself is not subject to scrutiny, but FATFA is casting its net very wide in search of any participants in decentralized space to whom those KYC AML obligations can be attached. So it might be an operator of decentralized protocol, owner, or anyone else with sufficient influence over the protocols. And as you can see, this creates a lot of uncertainty for DeFi participants, developers, for those that, for contributors in that space that may be somehow involved and may be somehow caught within the net of this scrutiny. And if they are, they will be responsible for complying with the relevant AML and CFT obligations, which in itself is a very difficult, perhaps often even impossible kind of requirement to comply with. So if you are operating in this space and you consider yourself a party involved in directing the creation and development of that kind of software or platform, or consider yourself creator, owner, or operator, or if you have control or sufficient influence over the assets or software or protocol or platform, and it can be really anything. It can be even control of some keys, or if you have any ongoing business relationship with the users, even if it's exercised through a smart contract or voting protocol, you may wish to pause and consider your position in that space because the regulatory scrutiny is coming for those participants. Finally, it's worth mentioning DAOs here as major organizational forms emerging in this space, and they create a lot of regulatory issues. They don't have DAOs don't have legal personality, then they don't have formal legal recognition. There is a lot of questions about the legal standing and the legal recourse they may have, and a lot of questions regarding liability for DAO and its members. There are questions about taxation and a lot of other questions too. So DAOs, again, just those questions, those issues create a lot of incompatibility of DAOs with legal and regulatory frameworks. And many of these questions are not answered. This is an untested legal territory. And little by little, some jurisdictions start looking at that. For example, Wyoming passed what is called the DAO Act, which aims to provide a corporate protection for DAO participants, so fit DAOs within corporate LLC structure. However, it might not be suitable for all projects out there, because even this kind of very progressive act in a very progressive jurisdiction that Wyoming is, requires the presence of managers and a discretion over the governance functions of the DAO. So again, here, even though the act aims to regulate DAOs, it introduced the level of centralization that not all DAO projects are able to have or willing to have. So overall, this is a very dynamically changing landscape of legal and regulatory considerations. I re-emphasize that anyone involved in that space, if hasn't yet already, should start looking at legal and regulatory considerations, and all the projects out there should definitely start thinking about introducing legal and regulatory review into their projects. And on the parts of the regulators, and this space requires a very comprehensive regulatory strategy with the deeper and broader understanding of how this technology challenges the core principle, the operative logics of the existing systems, the established order. So very simple approach of just let's think how we regulate this space might not be effective, neither for the DAO, for DeFi participants, nor for the regulators themselves. And the DeFi space offers a lot of opportunities to reassess the regulatory approach overall, because as Peter was saying earlier, this is a transparent space where everything can be audited, where everyone can have access to these protocols, can read the code, and that offers different kind of regulatory opportunities for governing this space, basically. And traditional approaches are by and large out of sync with the DeFi space.